I'd like to give a shout out to our amazing community, especially Austin Goose, who in yesterday's video said, "I have been a financial blessing to myself and my little family. Ken, you've been a huge part of my investing and trading journey. As a masterclass student and a CTKS indicator user, I'm so appreciative. When I started watching you, I was single. I am now married and have a 10-month-old baby. Wow, that's just so beautiful." Austin goes on to say, "I have done well and make humble gains regularly." Congratulations, Austin, on the birth of your baby. And it's so good to hear from you, my friend. And when you look through all the comments, we have an amazing global family. If you'd like to be part of our global family, it's really simple. Just like and subscribe this video and just be part and reach out and just say hi. We're very welcoming people. Let's get into the markets and see what's cooking. Bitcoin just recently got above this very intermediate resistance level. Maybe I'll just zoom in there. That's a bit better. And I'll put my little arrow under a bit of a weight loss thing here, and you can see we're starting to cross over. We're starting to find support coming back into the market, but it's really early days yet. A lot of people want to buy at that bottom, but they're just not in the market when it occurs because these bottoms tend to fake people out. Emotional control is incredibly important. In fact, it's the first thing you need to master. Ken, but I thought that I just needed the right setups, just needed the right way to look at the market. Well, that's really important. But if you can't pull the trigger, hey, guess what? It's not going to work. Now, what does this mean so far? Just from a recent indicative price perspective, we could come up to that 69,000, just consolidate a bit and seek to attack around that 72. That's a base case scenario for the bulls. If we get above that 72,000, wow, things could get really interesting. As a member of our community, you'll know that we have three cases. We always consider the negative case first. What could that look like? If a negative case comes in, we're likely to come down to around that $61,000 mark. Reconfirm this once support as resistance around that 64 and then resume down, trying to undertest that 62 before we go down. They're the two major things that you should be looking at, the bullish case and the bearish case. And with this kind of concept, you're really well advanced. Now, what about the third case? Because there is a consolidation case. That would just be not being able to break up and not being able to break down, like getting caught in a really bad relationship. Just consolidating. Now we know one chart can't walk alone. It needs the other charts to tell us what's happening to it. So let's get a bit of a game plan together and let's stack probabilities on where the markets could be going to next. You'll find our community is really special. It's a crypto trading and investing community with a ton of heart. Well done to everybody yesterday who said Bitcoin cannot escape the stock market's gravity. Look at this. Look at how it's just dribbling along with the major indices. The major indices came up and then they started to come down. A lot of people inside crypto will be just judging crypto only on crypto news. This is a really big mistake. But Ken, how can it be? Well, crypto is just part of a larger ecosystem. And when you look at the main markets, you can see they've been coming down. They flattened out. What's that blue line? That blue line is Bitcoin. Oh, okay. So Bitcoin tends to move with the NASDAQ. Oh, does it tend to move with the S&P 500? Yeah, it does. What about the Dow? Oh, that's pretty interesting. What about the Russell? Yes, sirree, Bob. It certainly does. So we can see where crypto is going is more a function of where the major market indices are going. So let's look at that. When looking at the NASDAQ is currently on the positive normalized price path and it's already hit our targeted return for the month. Congratulations, NASDAQ. You're only about halfway through. Wow, this is going to be a really interesting month. It's been a strong month. Now, what do we see here? We see some levels of structural resistance. And all of these charts, when we draw them up, we're looking from a longer term perspective. We just don't want recent indicative price. We need all of the structure. And we can see that we just pushed across all of this structural resistance, and then we started to find a bit of headwinds up around that 16,800 mark. We also know that if we can get above 16,820, we're starting to get into good territory. But if we can't maintain, if we can't get above, we're going to the level below, which would be at 16,620. Now, what does this mean for Bitcoin? Bitcoin has been traveling up just like the NASDAQ. If the NASDAQ futures come down to that 1620, there's structural support there, so they're likely to find support. Now, what does support do to price? When price hits support, it can go a little bit lower, so just be aware of that. When it finds support, it can actually pull buyers in and start to re-challenge these higher levels. Support is fantastic. What about when we look at the S&P 500? We can see that the S&P 500 got above this structural resistance at 52.69 and that it came up to the 5300, based out a little bit and tried to attack the 53.26 mark, but didn't have too much success there. We can see a little bit of weakness in the market. We came down and hit structure and bounced like a Super Bowl, but currently we're a little bit weaker. This is favoring a bit of negative price action inside the main markets. And what does that mean to Bitcoin? Yeah, it kind of means that it could be under some degree of negative pressure unless we turn around and start trading at least above 53.14. We want to get the bulls convinced that we can come up and attack this 53.36 mark. So why is the S&P weaker than the NASDAQ? It's because of all of this aggregated structural resistance. It's like being underwater and getting pushed down. That's why the S&P 500 didn't do as well as the NASDAQ. It all comes down to structure. It's really important to think about yourself as a professional. Don't think that you're retail. You're professional as soon as you start thinking that way. The skill and the experience will follow. One of the things that pros always do is they look at the US 2-year and you look at the US 10-year. And what did we see? The US 2-year was coming down. And what have we seen Bitcoin doing? It's been coming up. But just notice this, as soon as the US 2-year started to gain strength, what started to happen? Bitcoin started to level out and then started to see downward negative price pressure. This is because the yields are really important. So why did the yields bounce right down here? Well, we've got a little indicator that we can pop on that's going to tell us, it's going to reveal the secrets of the charts. Specifically, we're looking for structural support and structural resistance, and whoa, there was a bucket of structural support. Structural support, when it's really confluated like this, aggregated, is really, really strong. Even though we can get movements below that structure, we would expect it to capture it and rebound it. This is the nature of structure. But what we can see right here on the US 2-year, it's coming into a fairly steep level of structural resistance. That could put into play some negative pullback, which of course will push Bitcoin's price up, and also the major indices. We need to zoom out a little bit here. Yesterday, I was talking about the US 2-year just leaving that normalized price path, and I was saying a lot of people will get into the market at the wrong time. They will see this different, the finding of structural support and the rebounding back to the normalized price path, and they'll say, oh no, I mistimed it. For example, the major market indices were going up, Bitcoin was going up, and I entered, and what the price did from there on is just went down. But no chart must walk alone. You must look at the Tier 1, Tier 2, and Tier 3 charts. Now, what am I talking about? The Tier 1 charts are really important. They comprise the major market indices and a major bucket of charts that are really, literally the engine of financial markets globally. What we want to do is to understand where Bitcoin and crypto could be doing, or could be going. Why do we want to understand that? Because crypto is so sensitive to risk on and risk off activity. And we know that crypto follows the major market indices, and it's also very yield dependent. These yields will cause a big shift in risk on and risk off sentiment. And also we can triangulate through the Forex pairs. You want to look directionally, which I showed you in yesterday's video, and you want to look structurally as well, which I'm going through right now. So we can see that the S&P 500 and the Nasdaq are under structural weakness. When we look at the US 2-year, that's getting a little bit weak. That's coming into resistance, but that's a good thing. That's what we want. We want a retracement on the US 2 because it's caused some issue inside the market. Now, if the US 2 and the US 10 start to retrace after their sort of mean reversion, that will put positive price momentum into the major indices and junk bonds. Remember what I was saying yesterday, keep your eye on junk bonds. But what we really need to do is to look at the structural levels on both Bitcoin and total. What we're trying to do basically is to figure out, is the crypto market coming up and the stock market coming up? If we know the answers to those questions, we're in front of the vast majority of people, and that's what the cheat sheet is for. And it's available free at CTKSMethod.org. And if you want all of the indicators, they're available there as well. But let's have a look at the structural levels. Let's have a look at total crypto market cap, and we can see as the major indices rallied, the entire crypto market capitalization came up to $2.328 trillion. It was a really good rally, but this structural resistance can hold price, and how? And what do we notice now? This is not too good. This is a negative fresh air gap retest. We don't want to see that. We wanted to see it get above and go forward, but we tried to do that as the liquidity entered the market when the markets opened, and it didn't happen. So what's been happening? We've been seeing weakness as we've been seeing strength in the yields. Now what's going on here? This is kind of interesting. We're seeing a bit of a cut over in terms of momentum to the positive side. This is indicating that yields are most probabilistically going to weaken, and we're going to get a bit of an uptake in total crypto market cap. A lot of people would see this negative action and say, I'm out of here. This doesn't really look too good. And of course, that could be your strategy, but we want to read across the charts. And don't forget, a lot can happen in 24 hours. But what we're starting to see when we stack the probability of the different charts, if we can get above this 2.3 trillion and start to get to this structural level, especially above it, that's putting in a big bullish case to come back and to just get above that 2.329. As you saw on the US 2-year, the structural support was hit, and it took a while for it to turn around. We're seeing a similar thing with total, but we must look at Bitcoin. Structure gives you everything that you need to know. As part of our game plan, we of course must look at Bitcoin structural levels if we understand where they are. That's really important. And what did Bitcoin do? It got through some structural levels, and then where did it go to? It wanted to get up to that 66,800 mark, but because there were several strong structural levels of resistance there, it didn't even get up there. We saw better work on total crypto market cap, but we expect that because the alts tend to over-exaggerate the upside, and also they tend to over-exaggerate the downside. Now, what have we found? If we couldn't get above this 66,800 mark, we were coming back to the 64,800. It's a very simple policy. If you can't get above and reconfirm as support and then continue on, you just come back to the level below. And we've seen this time and time again. That's why it's so important to understand structure. If we see the US2 and the US10 starting to retrace away from their resistance levels, that will put positive price momentum into the crypto market and also the main markets. It's much more important that you understand what's going on, not simply just be given levels. You can get the levels from the indicator at any time. You just add it to your TradingView account and you'll get the exact values when you just hover over your mouse on these particular levels. But what I think is more important for you is to understand how the systems all work together. Our community is an understanding and learning community, and the focus, the thing that pulls us all together, is to be more of a financial blessing to ourselves and those we love. And you get that through knowledge. You don't get it through any other methodology. As Art said, it's not an easy road. Commitment is not easy, but very fulfilling in the end. We have such an amazing global family. Please join us. We literally have one of the nicest and most welcoming communities in the entirety of YouTube, and it's non-toxic, which is really cool. You're very safe here. We're an awesome community of learners and very good people as well. When you look at the US 10-year yield, you can see that inversion that tends to typically occur. And what happened when Bitcoin started to equalize out, the US 10-year was starting to find support. And then the 10-year and the 2-year started to gain strength. And what happened to the main markets as well as crypto? They started to find weakness, and the yields will impact everything from Forex to commodities to stocks to crypto to the major market indices. So you really need to look at them. But Ken, I only want to look at Solana's price chart. Well, if you were trading Solana, that is. Or it could be Tesla's price chart, or it can be anything. The problem that we face inside markets, if you just look at the chart that you're trading and you don't look at your timing signals, you're going to be in trouble. Because you'll simply not be capable of timing market momentum. Now let's look at the US 10-year. Let's just zoom into this area and see, are we at structural support? If so, that would tend to suggest that we've got more positive flow through and more negative flow through on the crypto market and the stock market. Or are we coming into a resistance, a structural resistance level on the US 10-year? From all of price history, and therefore that could put some negative price momentum into the US 10, like we're seeing with the US 2. So let's check it out. Looking at the US 10, just zooming in, we can see a structural level at that 4.395. Now, we also saw that price came up, or the percentage came up, and just didn't make that structural resistance level and then retrace down. Where was it going to? It was going down to structural support levels, and you can see there's quite a few of them. So the US 2, the US 10 had substantial structural support underneath them. Of course they bounce. We were anticipating that yesterday. That's why I was saying people tend to get in at the wrong times. But if you don't know the structural levels, you just don't know. Now, what could happen here? We've got one of two cases. Well, we've got one of three, really. If we look at this particular momentum, if we start to top out here, it's looking good for all of risk-on assets. We would expect the US 10 to fall down and the US 2 to fall down as well as the DXY. Keep your eyes on the Forex pairs as well. But Ken, that's so much of a headache. I just want to put my money in and hope and pray. Well, hoping and praying definitely has its place. But not inside financial markets. You do not want to hope and pray inside markets. Instead, you want to get your timing correct. You want to understand, what are the charts telling you? Because the charts tell you the news. Everybody wants to go to the news. Oh, what's cooking in the news? The charts have already front-run the news. Please be aware of this. A news addiction is not healthy. A chart addiction is very healthy. Okay, Let's have a look. So what we're looking at here, if the US 10-year decides that it can't get up here, and it's kind of looking that way at the current time, but it's a little bit early to tell. It's just on the verge of going one way or the other way. It's starting to curl over, which means that the sellers are just pushing it down at the current time, but it's a little bit too early to dictate if it's going up further or coming down at the moment. This is one you're going to have to keep your eye on. But all in all, it's good that there is structural resistance that's previously failed. And just don't forget that if we get a rally inside the main markets with the US 10, the US 2, the DXY, the dollar-yen combo coming down, and we would expect that the euro dollar and the Aussie dollar be coming up and junk bonds becoming coming up as well. There's a lot to look at. That's why you have the cheat sheet. We also know that Bitcoin is starting to turn around. It's starting to get towards a good level. So we could see, at least in the short term, a bit of a push up in crypto. But if we go to follow through with the yields and the Forex pairs that favor the DXY, well, that is really cool. It's definitely a different way of looking at your charts, but when you stack your probabilities, it's just magic. You'll get an understanding as to why things are occurring. Things won't be a big mystery anymore. You'll say, Ken, what actually happened here was that we were coming into structural resistance on Bitcoin, and this was indicating that we may have a topping out, just in the immediate short-term basis, of the follow-through on the S&P, the NASDAQ, the major indices, and a bit of a bounce on the US 2, the US 10. When you start talking like that, and you of course can talk about junk bonds and you can talk about Forex and commodities as well, because they all cross-reference each other. And you thought that you were just trading crypto or investing in crypto. Not so. You're investing and trading in the entire market. It does take many, many decades to understand that. A lot of people think that they can just drill into one chart and one chart only and say, oh, I have a crystal ball. In my crystal ball, I know exactly where Bitcoin is going. No, you don't, unless you're stacking all the other probabilities of all the other charts. Now, hopefully, when you look at this chart pattern, you're seeing so many things play out. You're seeing the major indices play out. You're seeing the inversion of the US 2 and the US 10. You're seeing so many things. And if you're inside the service, I go through this every month. I give you ways to look at the market that you will not ever see me talk about in public. And I do talk about a lot of things in public, but what I talk about behind closed doors is very, very valuable. Yeah, more valuable than this. And that's because people who are willing to invest in their education, I want to make sure that they get outsized returns. So what we can see here with Bitcoin, we found a level of structural support, and we know that we have to look at all the other charts to understand what could potentially happen here. And it's looking relatively positive, but it's really early days. Please keep the US 10, the US 2 on your radar, and especially those structural levels to understand how the entire market is moving. Now, if you're inside, for example, Solana, and you wanted to say, where's Solana going? You would need to look to Bitcoin first. You would need to look at total. You would need to look at the major indices, and you would need to look at the yields and Forex pairs. But Ken, I only want to look at Solana and what it's doing. That's what you need to do, because Solana cannot escape Bitcoin's gravity. Speaking about Solana, I've just overlaid Solana. That's the white line. You can see Solana moves with Bitcoin. And it doesn't move exactly. It moves in what's called directional correlation, over and under exaggerating Bitcoin's price movements to both the upside and to the downside. Therefore, to understand what can happen to Solana, you need to understand what's going to happen to Bitcoin and total crypto market cap, the S&P 500, the major indices, the yields, the Forex pairs, the commodities. Over time, this will give you an incredible insight into how the markets are moving and why the markets are moving that way. You won't need to tune in and look at the news, which is often just a reactive thing. They can give one reason for the news going up and the same reason for the news going down. Well, the price. What we're seeing currently is that the markets are favoring the probability of a bit of a tick up until at least the yields reach a level of support. As Alpha Harbinger said, fear is a reaction, courage is a decision. There is no lack of opportunities. Very true, my friend. Managing your emotional state is incredibly important. As Michael said, it's so important to get your potential edge together, and that edge is always psychological. Michael says, like any other performance-based endeavor, think of sports, it's all about the mind, as much as it is about the technical aspects, likely more so, and there's a lot of truth in what Michael says. Just remember, the greatest in the world, the greatest tennis players, the greatest golf players, the greatest basketball players, the greatest rugby players, the greatest table tennis champions, just name it, the greatest swimmers, all of them have coaches, and you need coaching in this specific area. When it comes to trading and investing, it's an elite sport. And that's the way you want to treat it. You want to get your mind correct because it literally is all between your ears. The reason that we have the CTKS creed is because we need to make sure that our minds are really, really positive, because all results come from the mind, and therefore a better mind creates better outcomes. How do we get better outcomes? We just need better habits. When you have better habits, you'll get there. And always remember, always say to yourself the positive, daily positive affirmation, I am dedicated and committed. I win or learn and never blame. If you do so, you're well on the way to success throughout your entire life. Have a great day or night ahead, my friends, and I hope this video has helped you to look at the markets in a more discerning way. When you understand how all the charts work together, you'll understand that you can do incredibly well. What do successes do? They do what failures do not do. That is, they put in the work. That would be something really fantastic to talk about in today's comments. So, if you made it all the way here, you are awesome. You're just fantastic. And maybe you would like to just put a little comment together on dedication and commitment, because you are showing it in spades. That is, you're showing a lot of it. That's fantastic. Well done, my friend. Have a great day or night ahead, and Kate and I look forward to catching up with you again in the next video. Bye for now.